Namaste and welcome to the Market Commentary series. Today we will take a look at the recent US Fed announcement on interest rate cuts and its implications for the Indian IT stocks. Before we dive into today's Market Commentary series, make sure to subscribe to the channel. The US Fed, Federal Open Market Committee, lowered policy interest rate by half percentage point to 4.75 to 5%. What does this mean? This is the first rate cut in more than 4 years. Recent indicators suggest that economic activity has continued to expand at a solid pace. Inflation moving sustainably down to 2%. GDP rose at an annual rate of 2.2% in the first half of the year. Growth of consumer spending has remained resilient. So why is this top news? Over time, these rate cuts will reduce borrowing costs for individuals and businesses. Spends by business will grow and they will be able to channelize it into discretionary IT spends, which will benefit Indian IT companies. How does this impact Indian IT stocks? Before we deep dive, we need to look at important leading indicator which will give us a good perspective. Indian IT companies mirror performance of Accenture to a large extent. Will be worthwhile to take a look at how Accenture has performed in the past. In the recent Q3 FY24 results announced a few months back, management expects FY24 revenues to be in the range of 1.5% to 2.5% growth in local currency. These projections have been revised quarterly, indicating an unstable demand environment. Q1 FY24 at 2% to 5%, Q2 FY24 at 1% to 3%. It has cited clients prioritizing large-scale transformations, which convert to revenue more slowly while limiting discretionary spending, particularly in smaller projects with delays in decision-making and a slower pace of spending. Also, revenues from Americas were flattish. As of yesterday, we saw some worrisome news in the media. Accenture was permanently changing its primary promotion date from December to June, which is when they expect to have better visibility of their clients' planning and demand. From an Indian IT company's perspective, there is a high degree of correlation with revenues of Accenture and TCS and Infosys, as can be seen in the chart. Americas contribute to over 50% revenues for almost all IT companies, highly dependent on the discretionary spends by these large companies. In summary, magic or turnaround is not going to happen immediately. It will easily take a quarter or two for the flow-through to happen. Let's keep an eye on the Accenture Q4 numbers to be announced on 26 September and not be carried away by the euphoria. Well, that's all I had for you in this market commentary. If you enjoyed this video, make sure to subscribe.